Hi traders, this is Brad Gilbert with the FX Market Insight for the 31st of August. All right, now let me just rip into this. Okay, so yesterday we didn't see a lot of activity. Okay, there's a lot of geopolitical news out around around Trump, and he's whipping up a bit of a storm against pretty much everyone. But if you have a look at the charts, okay, let's just focus on this. Okay, the Aussies drifted lower. The Kiwi got belted and they're staying down. And these were both on the back of local economic numbers. Okay, the capex for the Aussie, business outlook numbers for the Kiwi. The Kiwi is much more important because it drilled home the focus that the AUD and NZD, the New Zealand Central Bank, was talking about a week or so ago, about if the business outlook numbers were weak, they'd have to probably cut rates to inject some life into the market. So to me, the Kiwi's got the best fundamental technical picture at the moment. The euro, we've had no major sort of US numbers, nothing out of Europe, so it's just drifting sideways. Okay, it's lost that bullish momentum that I had on the analysis. Sterling, okay, ever since it popped above 129, sort of 35, 36 there, it's just sitting up here. No one is willing to sell it with this positive Brexit news that they may come up with some sort of deal. At the same time, no one really wants to buy it either. So it is now just sort of jamming away sideways. And we're either waiting another Brexit update or some fresh sterling data. And we don't have any at the moment. So where next week is chock-a-block full of big UK data, construction, PMI, services PMI, a whole range of things. So, and dollar CAD, it's a little bit higher. The Canadian GDP numbers were weaker than the prior numbers. They weren't much weaker than what was forecast, but everyone was focusing on the prior numbers and these numbers. I think it went from 0.5 prior to flat. And as well as that, you've got Trump messing around with NAFTA, and you've also got OPEC messing around with oil. So it's getting pushed all over the place. Now, dollar yen, overall, okay, on an hourly time frame, sort of, if you're looking at it, yeah, yesterday it was up, today it's down. It's not really going anywhere. And this is primarily based around the geopolitical framework that Trump's got going on with China. And you'll see here in a minute, he has really talked things up. But overall, if you look at this, okay, so if you look at these four major pairs, Aussie and Kiwi moving down, Euro sideways, and Sterling up. These four currencies should be correlating, going the same way. When they aren't, you've got to work out what's going on. Now, dollar yen also lower, dollar CAD higher. That doesn't make sense, right? The dollar is moving in all different directions. Now, if you can't see the answer yet, the easiest thing to do is come over to the dollar index on your charts and have a look at it. It is just trading sideways. What the answer is, basically, there's individual events happening on those other currency pairs. As I said, there's Aussie and Kiwi data out, Canadian data, which was out, Brexit for sterling, nothing in euro, why it's trading sideways, and dollar yen's getting pushed around with, various, if anything, a bit of risk off. If you have a look at the equity markets here, or a sea of red. Now, it's not big, but these, the media and everyone else is pumping it up as being, this is the start. If Trump increases the tariffs on China, everything's going to go a little bit pear-shaped, which I think is just a little bit hectic. It's rumours. Okay, now, dollar China. What's happening here in dollar China? Okay, now we had the PBOC push it down about 8 or 10 cents. The speculators just sat by and just let them do their thing. It steadied, and now they're back in buying it. It is now weakening, okay? So the weaker yuan should lead to a weaker Aussie and Kiwi. So that fits in perfectly with the weak Aussie data, weak Kiwi data. Now you've got a weaker yuan, which pushes those two currency pairs down. And this brings us up into today's trading. And if I just bring over the MyFX Trading Hub, you'll have a look here. We come down. We've got the key focus for today, especially in that Asian session, is Chinese manufacturing. Now, I still think it's a little bit early for the manufacturing numbers to be impacted by the US tariffs, but we may start to see some weakness. If we see weakness in the Chinese manufacturing with already a weaker yuan, with already weaker Aussie and a weaker Kiwi, we are going to see a really good trade to the downside in those currency pairs. Okay, so I think that's the main thing. Just to understand, geopolitics is still dominating the scene on a number of pairs at the moment, right? The Aussie and Kiwi, because they've got that fresh lease of life from that data yesterday, are sort of operating on their own accord. That should last today. Hopefully those manufacturing numbers come in weak. It's been a while since we've had everything line up like this. This would be a really good opportunity to get short those pairs. Now, coming to the European session, well, we've got European flash CPI. Now, it's going to be important with the euro trading sideways. But if I just come back to the majors here, so you can see where the best opportunities are. Let me just go through the economic numbers here, just because there's a few extra releases besides the ones that I've mentioned. Now, as I said, the core numbers here for that Asian session are definitely going to be the Chinese manufacturing PMI numbers. Okay, you've got to keep an eye on those. Now, if they're weak, Aussie and Kiwi will already be heading lower. Now, at the moment, the Aussie housing market is starting to tumble. If we start to get weak housing numbers out of Australia as well, that's going to be another awesome opportunity. We've got weak Aussie and Kiwi data from yesterday, weak Chinese numbers, weak housing numbers. This is like the economy is just stalling on a dime, and that's where we can get into a really good trade here at market. I think it's just a sell at market opportunity. So that's where that really good stuff comes in. Now, as we come into the European session, there's a few extra releases that you need to sort of focus on. German retail sales, okay, usually pretty steady, but the numbers have been quite variant of late. So make sure you have a look at that. That could impact euro to kick things off. Nationwide house pricing out of the UK, very important. Nationwide used to be one of the building societies before they probably became a bank, especially when I was living in the UK in the 90s. Their numbers are very well respected, so keep an eye on that. As I said, sterling's in the middle of sort of nowhere. We really need big variance here to get things moving. Okay, it's just trading sideways. No one wants to sell it. No one really wants to buy it. We need a reason to buy it or sell it, and this is where that data comes in. Then you've got the flash estimate numbers out of the Eurozone. Now, keep an eye on the Eurozone unemployment rate. In the past, this number's sort of brushed aside, but it can impact, okay? So make sure you do keep an eye on that. We're looking for anything to give us a reason to either buy or sell euro at this point. I think the bullish tone is definitely out of the market, and if we don't get something strong out of Europe shortly, then it's just going to start drifting lower once the dollar starts to crank up. So coming to that North American session, once again, producer prices. Okay, this is going to be important, sort of an inflation number. Now, we do have the Bank of Canada meeting next week. The GDP number put a bit of a negative spin on that potential of a hike. So we'll see how those numbers go. And then the North American session, the University of Michigan consumer sentiment numbers, they're the final numbers. They're usually a bit closer to the mark than their prelim numbers. But that's all we've got to work with. And if anything, and I'll just come back and show you now, what we've got is we've got a situation where the Don, Trump, okay, especially in the North American session, he's sort of creating all sorts of issues with regards what's going on. And if you come back over to the pages, I was having a look this morning. He was threatening to pull out of the World Trade Organization. He's just putting everyone on notice, like China, Europe, everyone. Like just whoever's breathing is coming to find you. OPEC still dealing with issues there with oil that continues. So with that as well, don't forget we do have NAFTA swinging away. So we've got NAFTA banging away. We've got weak GDP numbers for dollar CAD. Dollar CAD to me is just too hard. Don't worry about it. I'm not worrying about it. But if it's your favourite currency pair, then by all means rip in. But it's pretty tough. Sterling, Brexit. Okay. What I'm isolating is try and find the pairs that don't have a major geopolitical issue, right? And as you can see, I mean, even the Argentinian peso has fallen out of bed. It's lost 1/5 of its value, even though the central bank raised interest rates by 60% or up to 60%. That's just like crazy. And the talk is, if you come back to those equity markets, the reasoning that a lot of the media outlets have given for the move down in equities is all the talk about Trump increasing the tariffs on China, and that is putting a negative spin across global equities. So we'll see how that pans out. What you need consistency across this. We need weak equities for like a week, and we need them down 1% every day at least, and then you start to get a real crisis. If it's down 0.5% here or there, it's pretty flat to me, so I'm not getting too caught up in that. So coming back into the trading today, okay, focus on the key the raw nerves. Now, before I go through the data again, just have a look here where now I've got the euro, okay? I was going to say the daily analysis snapshot. I won't go into the detailed stuff. Now, euro, central bank, economic data neutral, and now the technicals are a bit sideways. Daily charts are up, Weekly and hourlies are sideways, so that's sort of lost its mojo. Sterling, okay, it's at the top of its range, but that doesn't mean it doesn't become bearish. This thing, inflation's very high. Previous economic data was very high, and it's now moved higher on a couple of time frames. So sterling has got a bullish outlook at this stage, as far as I'm concerned. We have a huge week of economic data next week for sterling. That will sort it out. Aussie, we come into the Aussie. It's got a bearish technical outlook only. Okay, so I see it moving lower, and that's where that Chinese numbers can come in. The data's been a bit neutral. Those CapEx numbers yesterday were weak, but it balances off, slightly stronger employment numbers and the GDP. So to me, the data's neutral, but technically it's bearish. Dollar CAD is the main currency pair, and it's not often it is. Fundamentally and technically, it's going down. Same as dollar Swiss. Technically, it's right behind the Kiwi as far as a bearish outlook. And the rest of the currency pairs, as far as I can see at the moment, US dollar sideways, in the big picture, dollar yen is sideways, and with all the crap going through dollar CAD, it is also sideways as well. So looking at that, to me, this is the way I'm going to be playing it. I'm focusing on these pairs. Because of Brexit, I'm going to give sterling the big miss. Always looking to get short a good technical bearish pair, that's dollar Swiss. But Aussie and Kiwi, they have very strong sort of bearish sentiment. It's very fresh in the market as well. So you come back to look at where potential opportunities are. I mean, it's clear as day. We've got Chinese manufacturing numbers, huge for Australia and the Kiwi, more so the Aussie. But you want to keep a close eye on this, because if we get weak Chinese manufacturing and weak housing data, it comes on the week of CapEx. The central bank that's been bullshitting the market about potential rate hikes down the track, they'll be looking to cut rates as soon as next month if all this shit falls apart. Okay, it really bugs me that the central banks try and tell porky pies. But that's where we are, guys. So just keep an eye on this data as we go through. And I'm just having a look here across the major currency pairs again. The like Aussie and Kiwi, the two pairs, the two raw nerves at the moment, are starting to move with what's going on there with my pen? With that move in the dollar yuan, right? The yuan is weakening. That's pushing these currency pairs down. If there's something out about China increased tariffs, I expect dollar yen to move lower as well. And that'll take Aussie yen and Kiwi yen with it. So we're just going to play it as we go. But the Asian session to me is probably the best. Don't forget in that early European session to check out those other Eurozone numbers. There's a bit of UK numbers, and there's also some German and obviously the inflation numbers and employment numbers out of Eurozone as well. All right, guys, that's it from me. The pretty interesting session coming up. I was hoping the Aussie and Kiwi wouldn't take off before these numbers, but just keep a close eye on the Chinese numbers and also the Aussie housing numbers about half an hour after. All right, chaps, have a good trade day. We'll see you in the trade zone. Cheerio.